Yo, happy Thursday, everybody. What's happening, everybody? Look at what we got up here. Some beautiful ladies. This is a Fly Nubian Money, where we help you to master your mindset and maximize your what? Your money. Yes. So listen, you guys, it is tax season. Is anybody excited about tax season? I want you to put it in the chat. If you are excited about tax season, let us know that you are excited about tax season. Is anybody in here excited about tax season? I want to know. Anybody? This tax season. So I know, for you ladies, you guys probably make all this money, so you're probably not really excited about tax season. The reality is a lot of Black folks are excited about tax season, but I got a news flash for a lot of people. Your taxes are not a bonus. Let me repeat that. Your taxes are not your bonus. Far too many times I hear people always talking about, yes, it's a tax, I'm about to get my refund. The reality is that you've overpaid taxes, the IRS, and so you're getting back what you overpaid. It is not a bonus. It is not a flex to get money back for taxes. Okay, so with tax season being right around the corner, today's conversation is really more than about refunds. It's about how tax laws are structured. And that's what we really need to understand. Because if you're just looking at taxes for refunds, then you got the game twisted. It's about who really benefits from it. It's about how the game is set up, who they leave behind, which is normally your behind, Black people. It's a reality is we're paying more often and we're receiving less than other groups. Other groups benefit from credits and deductions and loopholes that can quietly build their wealth over time. We're also going to get practical, how to avoid common filing mistakes and how to approach a refund with intention, and how conversations around credit card interest rate caps expose just how deep everything is. This is really about policy and personal responsibility and knowing the rules of the game that affects us all. So before we start the conversation, I want to introduce some of the flyest ladies who are here with us today. Now, they've been on here before, so this is my first time getting to hang out with these beautiful ladies, these beautiful queens. We have Dominique Morgan. She is Dominique Morgan Realtor. She's also an RN and a coach. Girl, she does it all. Hey, lady, how you doing?
I'm good. How are you today?
Good to see you. Welcome. Welcome. And then we have Dr. Angeline. She is a systems educator, and here she is. She's a disruptor. And so I am excited about having this conversation with the both of you ladies. How you doing, Dr. Angeline? You good? You Gucci? All right. So, ladies, it's tax season, y'all. And I know I asked earlier if anybody is excited about tax season. So let me ask you, is there trepidation for tax season for you two? Or are you excited about that? Is it a challenge? Like, how do you prepare for tax season? I'm going to ask you first, Miss Angeline.
First of all, I prepare hoping and praying that I'm not owing. That's number one. That's how I prepare. Then basically just get all the forms together, have a real quick conversation with my accountant, and then we go from there.
Understood. Yes. Mm-hmm. So you pray, you prepare and pray. That's your method.
Yes.
All right. What about you, Miss Dominique? How do you approach tax season?
So it is stressful for me because not only do I have a business, but I still work full time. So it's a lot of moving parts, making sure you have all your documents in order, and it can be a headache. I oftentimes ask for an extension because it's just so much, making sure you've captured everything, pulling everything together. It's a headache, but I just take my time, try to pull all my documents together. I try to keep everything together. Folders in my email, anything that I do related to business. And then I bring all that stuff together with my tax accountant.
That's dope. I say it's very rare that I actually pay anything in taxes. As a business owner, it's a beautiful thing. I don't like to really say that out loud, but it's also a strategy. A lot of people in certain positions, and it's not necessarily about money. It's the difference between earned income and passive income. Really is what the difference is. And as a self-employed person, you have what's called passive income. And it's taxed much differently. We're going to get into it, but before we get into that, I want to take a look at one of the videos, and then let's have a discussion around that, ladies.
So, fun fact about Black people, Black Americans are much more likely to face tax audit based on a study by the U.S. Treasury Department. So one of the main reasons why Black Americans are targeted more frequently for audits is because of the lack of complexity within our taxes. So it's much harder for the IRS to audit someone that has business income because it requires a certain level of expertise. And so it's much easier to go after people that do not have business income reported. Black taxpayers are far less likely to report business income, and they disproportionately file returns with the sort of potential errors that are easy for the IRS to spot, like underreporting certain income or claiming tax credits that they do not qualify for. So I'm not here to discuss the merits of this study. I'm just here to make sure that you yourself are protected. When you are doing your taxes, you're likely, especially as you get older, going to need to come to your tax person with more than just your W-2. If you're doing your taxes in January, there's a high potential that you are missing out on certain tax documents that you need to report. And depending on your tax person, they might not even be asking you for these documents if they have their own types of prejudice or bias. So I don't have an exhaustive list of all the documents you need when you do your taxes, but you want to really think about all the ways you had either made money for the year or were involved in some type of financial transaction, and go to that institution and look up your tax documents. But I do have 5 that I want to talk about today. So first is the 1099 miss, meaning if you did YouTube, if you got paid from Instagram, anything like that that provides or pays out royalties, you will get a 1099 miss as long as you made at least $600. And a lot of time, well, actually with the 1099 miss, it's definitely over $600. And then the next one is the 1099 NEC, which stands for non-employee compensation, which is also if you made at least $600. So if you did a workshop, you did some type of side hustle, and you got paid, you're going to get a 1099 NEC and you need to report it. The next is a 1099 INT, which is for interest. So if you have your money in a high yield savings account or just a regular savings account that provides interest, you're going to get a 1099 INT. You need to go to your bank, download it. You could have made $5, $10, $100. They're going to have that document for you. And if you like to buy and sell stocks, if you purchase index funds in a non-retirement account, you're going to have a 1099 div if you receive dividends, or if you sold stocks, whether you gained money or you lost money, you're going to receive a 1099B to record the gain or loss on your stocks. Make sure you're reporting all of these documents. Follow me for more tips.
So I know was that Dr. Angeline, or was that who said that they put all that was you, Dominique, that talked about having all your things filed in one place. What are some just for regular people, what are some best practices for taxes that you would say, like you would just like give to your little sister or you give to your cousin? Best practices.
So create a folder in your email and set it up as a tax folder, and you can create subfolders and you just dump stuff in there. So when tax seasons come around, you're not looking everywhere for it. You have an idea of where it is. You can scan it if it's something that you have in your hand, or if it's something that you receive electronically, just drop it in a folder in your email, and it makes things so much easier because at least you have one location that you're going to get everything. And then you could take that information and you can upload it in the portal that your tax preparer uses.
Okay. That's actually really, really good. So have an electronic copy in your email to where you could just easily access it, and you could just upload it and send it on out.
Yep.
Good stuff. Do you keep all your receipts? Because remember, a lot of people would like to, keep all your receipts. How do you manage that?
So I do keep the receipts, and I do the same thing. So I'll take them and I'll scan them and I'll just send them to my email. And again, with your folders in your email, you have subfolders. So you can label things and just say, okay, these are receipts from taking out a client, or, this is receipts from whatever it is. You can label it and just throw it in that folder, scan it, throw it in the folder, and then you could throw the receipts out. I hate paper. So I hate keeping up with stuff like that. So I'd like to have things in your email, or like have it electronically or digitally, so you don't have to worry about where it is and looking for it. And, because that's the biggest headache, finding and pulling everything together. If you have a general idea of where majority of your stuff is by some kind of electronic folder, and it doesn't even have to be your email. They have a lot of different resources out there. OneNote, Google Docs, they have things out there where you can just put it in there and you can pull it up and you don't have to worry about it.
That's great. Okay, I love it. What about you, Dr. Angeline? What are some best practices that you do to prepare to file your taxes?
So I am getting to where Dominique is. And then this year I bought actually a planner. I'm not always that girl to just throw everything into the email. I'm still that touchable, tangible. Let me see my paperwork. Let me look at everything. Let me add up everything myself at the end of the year or the end of the month. And so I just maybe the end of December, bought a planner where you can do all of that, because I also need to be cognizant more so of how I'm spending my money. And so all of that is in the planner as well, to help me know, okay, you spent too much on food going out this month or something like that. So that's where I'm trying to get, but I'm making my way there. Mm-hmm.
I will say that I'm with you, Dominique. Paper is not my best friend. Hate it. When I tell you I hate it, and let me tell you again, I hate it some more. So I definitely, any way that I could minimize having to use paper, I'm going to do things electronically. I use Rocket Money. That helps me to kind of get an idea of my entire financial picture. What are my outgoing expenses? What am I spending on food? What am I spending on travel? All of those things. So that organizes it on a higher level. And Expensify is a good one too. Expensify is a great app that you could use, that you could put your receipts in. It helps you budget. It gets you prepared for your taxes. So for people who hate paperwork, because I used to be Dr. Angeline, I used to have a file cabinet, a actual physical file. I don't even know what that looks like anymore. But a physical file with all my stuff in there and all my receipts and all that stuff. And now, you don't really throw anything away, especially if it's on the cloud. So, all my stuff is in Dropbox. And so that way, my email is not, is overloaded, but I have it on the cloud and I could access it at any time. I could go, and so when I was going through my divorce, it's funny because the attorney wanted to see every document that I had, they said, for 20 something years. And I was able to go back, I think 6 or 7 years or something like that, because I had everything in Dropbox. Every loan application they wanted to see, every piece of everything, every property we purchased, every HUD, every settlement statement, every bank statement, all of that. So I ended up having like 5,000 pieces of paper that my attorney had to redact. Ended up being super expensive. But anyway, I digress. I was able to reach in there because everything was in the cloud in the Dropbox, and I was just able to just pull it. Here's 2016, 2017, 2018. So, that's, for me, that's been a lifesaver in terms of me having to go back and I was audited too one year. So having to go back and get some things, it's right there on the, on my cloud. But I tell you, definitely keep good records. Make sure that you keep everything, especially if you are self-employed, because you never know when you're going to need that information. I want to look at another video, and I really want to talk about, like, what are some ways that we have been left out of this conversation, and then what are some ways at the end of it all, what are some ways that we can actually benefit from this? So let's take a look at another video.
All right, everybody, this is a humbling post. We're going to talk taxes. When typically, as a small business owner, when we're completing our taxes, we go to our tax professional or we go to our accountant, and the goal is to write off every single business expense as possible. How that plays and where there's a decision that needs to be made is afterwards, if you want to go to a lender and take out small business financing, they're going to ask you for a copy of your taxes for the last 2 years, and they're going to look at that revenue generated, that income generated through your business, and they're going to make a decision based on that. So you have a choice to make. Lower your taxes, write everything off, or go get the small business financing. Be sure to have a conversation with your tax professional and your accountant about what are the pros and cons on the decisions that you make when you file your small business taxes.
Business owners, both of you ladies are business owners.
Mm-hmm.
Have you found that being a business owner has been better for you as in terms of your taxes, or has it been more challenging, Dominique?
I think it's been better. And one thing that I would say, so I'm going to speak from a real estate perspective, and I'm gonna speak in general. So when it comes to taxes, I really believe that people have to have a plan. So I have clients that come to me and they want to purchase a home, or I have, and they're business owners, right? And so they're looking to purchase a home, but they're gonna, the lender is gonna look at your past 2 years. And so if you write everything off, then you look like you have no income and you can't purchase. And so we have to be strategic and we have to have a plan in place, because you don't want to be put in that situation where you can't make moves as a business owner, because realistically you want to write everything off because you don't want to owe anything. But if you write everything off and you don't show any income, they can't loan you money on something that you don't have. And so I think that it's important to have a plan in place. So if you're looking to purchase, and so for me, if I'm looking to make a certain kind of move and I know within the next 2 years, this is what I'm going to do, I know I'm going to get hit with taxes. And I'm just planning for this in advance, right? I know I want to purchase some property. I know I want to make some kind of move. I know I'm looking to do, get some business funding or whatever that looks like. And you plan for it. So I know these 2 years, because most of the time they're looking at 2 years. I know that they're going to look at 2 years. So I'm just going to take the hit temporarily, right? And so it's about planning, looking at your finances holistically and say, hey, this is what needs to happen. I want to purchase these buildings. I need to be able to show income, because I get clients that are entrepreneurs. You can purchase as an entrepreneur. They look at your bank statements, but they also look at your last 2 years of taxes. And if you don't have those things in order, and this is something that I find happens to us across the board consistently. I have somebody right now in the same situation. Like, I have this happen so much because they think they can't purchase as an entrepreneur. You can. You just have to show income, because how can they loan you money on money that you're not showing? And so it's just about having a plan in place. So it makes it easy for me. If I know that I have a plan, I'm planning on purchasing, I need to get business funding, I need to do certain things, then I'm planning to take that hit. And it's okay. Put yourself on a payment plan if you can't afford to pay it. And then maybe the next 2 years you make it up. You write everything off if you don't have anything, that you're looking to do.
I love that. That's a great strategy, because I think for entrepreneurs, the default is to write off everything. Mm-hmm. I'm writing off everything. So either I don't owe or I get some type of refund, but they don't show any income. And when they don't show any income, then traditionally they can't qualify, for a traditional loan. I'll say, even for me, my CPA was like, she was like, Constance, your business is making millions. How are you making $20,000 as the owner? You gonna get audited, right? So I was like, all right. But I'm so glad she did that, because that year I actually ended up claiming more income, and I ended up having the opportunity to buy a building in the business name. Mm-hmm. I wouldn't have even been able to do that had I continued to do it how I was doing it. So we put together some strategies on, how to make sure that it balanced out, because there's obviously, when you're qualifying, there's some things that you could write off, like some depreciations that you could add back, and that'll help you to qualify. So there's some strategies, and just, I think what's important is you can't be haphazard about who does your taxes. You have to have somebody who's really strategic about making sure your taxes are done correctly, so that you can make investments if you need to make them, and somebody who really understands. Because if you have a somewhat complicated tax situation and you just go on an H&R Block, they're just going to write off everything for you. And so you're going to be in that situation that Dominique talked about, where you can't qualify for nothing. And the goal is not just to get a tax refund. The goal is to be able to utilize it to build wealth. So that's the thing. Angeline, what about you? What are some strategies that you do?
So I love what Dominique talked about, because I got caught up in that. I was the write it off everything girl every year. And then I just had to really talk to myself like, you really being lazy because you don't know the importance of not writing it off. So I did get caught up in that. And I think both of you mentioned it, the importance of having a great conversation with your accountant.
Yeah.
What you need to do. And I ask every kind of question. I don't even care if it's not even related, and I think it might be, but I just go right ahead and ask the question and let her know what are my plans, my upcoming plans. This is what I'm thinking. This is how I'm thinking. Talk to me about how I can maneuver and what's the best way to maneuver.
Yeah. I think one of the worst things is being audited by the IRS, especially if you have a complicated tax situation. I was audited in 04 and 05, and I was only, I don't want to say only, but I was 26 to 04. I was 29, maybe 04 and 05. And I think I had maybe made, I don't know, $150,000 a year. And I ended up owing $50,000 after the audit, after the write-offs, after everything. You know why? Because I was just doing my taxes on TurboTax myself, and I didn't know anything about it. And so I was like, you know what? I will pay for a CPA to do my taxes and pay up front so I don't have to pay on the back end. So let me pay a professional, rather than, trying to be cheap and do it myself, because getting audited and having to sit in that audit office is no fun at all. It's not what you want. You don't want to play them games at all.
You bring up a great point. I'm sorry, great point with that too, Constance, because a lot of times in our neighborhoods, I just saw it happen. Like last week, I was over somebody's house and they pulled in like Jenny from the block to start doing their taxes. And I just was like, you got to be kidding me.
Yeah.
So I think you bring up a great point with that.
And also, you want to go with somebody that if you do get audited, they're gonna fight for you. If they do your taxes and they put your name on there as a preparer, you're in trouble. So you want to go with somebody that in the event that you are audited, that they're going to go to bat for you. It's included in their price. They put it all over the place and they back it with their name, not putting your name on there as the preparer when you know you did not prepare those taxes. So you got to be careful with that.
That is so smart. I mean, if you have a very simple tax, like your W-2, and you got a couple of kids, you could probably do TurboTax or something like that. But when it gets a little bit more complicated with deductions and things like that, that's when you want to think twice about doing that stuff yourself, because somebody said that Black people are the first to get audited. I'm not sure about that, but I do know that corporations get audited at 0.something%, which is way less than your W-2 employee. So as a business owner, you do have protections that regular W-2 people do not. And I think that's a big distinction. And as the tax code has changed, there are a lot of things with this big, beautiful bill that benefits the rich. And unfortunately, in most situations, we don't fall in line under what happens with the rich. So at the end of the day, we're the ones that are having to pay all the taxes. Think about this. Warren Buffett, who is one of the richest people in the world, he said that his secretary pays more in taxes than he does. And she makes $250,000 a year. And he's a billionaire. She pays more in taxes than he does. Why? Because the tax codes are set up in his favor. But it's not just because he's wealthy. It is, but then it's not because he has corporations. Mm-hmm. And when you have businesses, and that's the reason why people tell you to get businesses, when you have an LLC and it's making money, like, COVID, everybody went out and got LLCs and they didn't know what they just have an LLC just because. You don't want to get an LLC just because, but there are some tax strategies that you can use to reduce your exposure, your tax exposure. Do either of you guys have any, have you done this, use that strategy in your own personal lives, in terms of like starting a business so that you can reduce your tax exposure?
No, I started my business just because, I got into real estate. And so I had a full-time job. So I needed to figure out, like, I didn't want my real estate income coming in my name. So I wanted to get paid in my business name. I wanted to run my business as a business, not, as just, hey, write my commission check to Dominique. so that I could benefit from the taxes. But I actually went into business because I wanted to go into business, and created it so that I can structure it as a legit business. I didn't want to just have something that's like, okay, I'm just going to get this check and I'm going to play with the money. I really wanted to position myself so that I can get business funding, so that I can make moves business wise. I can invest using my business because my business is functioning properly. So that's the reason why I did my LLC. Even though I'm in real estate and I can operate as an independent contractor, I wanted to have a business so that eventually, I'm building out a team. I want to be able to get help my team members get health insurance. In real estate, you really don't have a lot of options and you pay a lot of money. I want to be able to set it up where I can create my own IRA and I can have a healthcare savings account just like a business. So my purpose was to do it so that I can function as a rich man's business as opposed to a poor man's business.
Ooh, come on, somebody. Come on, somebody. I love it. She functioning as a rich man's business. That's essentially what people do. I mean, it's really not. The tax codes are set up for the rich because they have corporations. They have ways to pass their money through. Think about this. Elon Musk, for example, when he purchased Twitter, he did not write a check to Twitter. Most of his money is wrapped up in his investments. So he doesn't have active income. He pays himself very, very little. And he has all of his money are tied up in his investments and in loans. And they don't tax investments and loans the way they tax your earned income. That's the difference between you and him. So you're going to pay more in taxes as a W-2 earner than he's going to pay. And so what he did is instead of him writing a check, he actually has his money in stock. And he took a loan out from his stock and he paid to purchase Twitter. So now the money that he took out of stock, he's taxed at a much lower rate than if he would have paid cash for it. It's a whole cold game out there. But those are some of the strategies that rich people utilize in order to pay less taxes, is because they don't have this earned income that most of us do. That's why I pay less taxes than you as a self-employed person, because I don't have earned income. My income gets written off. My income gets invested in other things where I'm not taxed at the same level as if I was to make the same amount working for somebody else, if that makes sense. Mm-hmm. But for you, Miss Dr. Angeline, we talked about strategies that some people use, like people who maybe are W-2 employees, but they've gotten, like some have done, have you heard of people doing this? They've done multi-level marketing businesses or things like that and created their entities so that they can take advantage of some tax benefits. Have you done that, or do you know anything about that?
No, I did the same thing. I started my business because I wanted to start my business. And most of the people that I know really are not going in fully prepared. And I don't think, I can tell you right now, I didn't know all the stuff that I probably should have known about taxes. And I didn't do my homework as well as I should have. And I think that's a big problem a lot in our neighborhoods. In our, we don't do the back end, the research work, and to know which way to go, even regarding LLCs, S corps, all of those types of things. Like how are you going to set up and structure your business? Mm-hmm. So no, but when I did go in, I went in just like Sis said, wholeheartedly. I have a plan, right? So even now I was talking to some venture capitalists pitching some things, and they were like, well, what are your next moves? And so I said, I'm going to need a distribution center. I'm going to need to know some stuff about manufacturing. That's where I'm going to need my help next. So let's have that conversation so I know how to strategically plan for when I get to that point.
Yeah, that's amazing. Because if we want to get put in the game, we got to start thinking differently. And I know most of us are income earners, but we have to start thinking strategically. So that's not a bad idea when people do have other side hustles and side businesses, because now if you have a side business, if you have a side hustle, say you're an Uber driver on the side and you have the money being paid to your LLC. Well, now you could write off your car, you could write off your gas, you could write off a portion of your house for your office space. Now you have tax write-offs. Okay. So there are things that you could do as a business owner, as an LLC owner, if you do it. Now, some people just get LLCs and they sitting there. In California, LLCs are $800 a year. That $800 is a lot when you ain't making no money. In other states, it's a lot cheaper. But if you are using that strategy, it could actually benefit you. But I'm gonna tell you guys right now, taxes are for the benefit of business owners and not average everyday working American people. It's not.
That's true.
So we have to make sure that we're doing things a little bit differently. And that's what the conversation I think really is making sure that we set up our stuff a little bit differently so that we're not going to not pay any taxes, but that we can reduce our tax liabilities. And there are strategies and ways we could do it. We have another video. We have a video that I want to show to kind of further the conversation.
Make sure that your high school seniors, you're going into college, even your college graduates know about taxes. I recently spoke with someone who is in their 20s and they've been working a job for the past few years and hadn't filed taxes. And so I asked, is it based on the amount that you're making? And I, checked to confirm if they fell into the category that didn't necessarily need to file taxes. And that wasn't the case. They weren't taught anything about taxes. And so I want to remind you as parents that it's our responsibility to teach our children these things. Don't have your child out there doing something they're not supposed to be doing or not doing something they're supposed to be doing because they just don't have the knowledge about it. If they genuinely don't know, they don't know.
Yeah. You don't know what you don't know. Have you ladies, I know you guys are both smart business women. Do you guys have children?
I do. And I could speak to that video based on my daughter. So she's been working since she was in high school. So I've given her the information to tell her, like, you still have to file your taxes. They don't really listen to us too much sometimes, but they do get the information because they don't understand that you're making money. You need to file your taxes off the money that you're making.
Okay. Yeah. Yeah. And then what about you?
I don't. I've raised other teens, but my family had businesses. So they always made sure that if we were working, that when they went to go file their taxes or if the accountant came to the house, we bought our behinds right downstairs with our little proud W-2s and we sat right there.
That's
and
great.
The accountant filed ours right alongside our parents. Yes. So.
That is great.
Mm-hmm.
I have to do better. My daughter just actually came in my office today and she goes, "Can I give you some parenting advice?" Now, I was just on the show yesterday and I was like, I have money conversation with my kids and my kid, blah, 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 blah. And she goes, "Can I have a parenting conversation with you about how you approach things with the boys?" And I'm like, okay. And she's like, you should have more conversations around like taxes and money and all these things, right? And I was like, looking at her like, I do. And we do. We mostly talk about investing. Like, what are you investing in? What are you doing? We talk about credit, but in terms of like taxes, no, I haven't had that conversation. She was like, I know nothing about taxes. And somebody was telling her about a strategy that, I don't really necessarily agree with. But what I did tell her is I have had these conversations with her, but it doesn't sink in until they're able to apply it.
Yeah.
We've had these conversations. So even if I have the conversation with the boys, they're not going to really understand it until they have to live it. And I'm like, I gave all my kids my credit book. You need to sit down and read this credit book. She read it back when she was like 18, but it didn't mean anything to her because she didn't know nothing about credit. But now if she reads it, now she understands credit. Now she can understand it. But I'm like, you've been around this environment. You've been going to these financial conversations with me. I've been talking credit. You go to my credit presentations. You're there. You're seeing this. So it's not like you're in these spaces. So as life happens, they do apply. So we should introduce concepts and things like that absolutely to our kids to understand that money is extremely important and how we handle the money is important. But I also understand that they're only going to get certain concepts when they're applicable. They're only going to get it when it applies to them. And I think, so I was just like, yeah, like you're right. I'm not negating anything you're saying, sweetheart, but we have had these conversations. But you just didn't understand them. And me having like those in-depth conversations with your boys at your brothers at this point is a moot point, because really they're not going to get it until they get it. But we still need to be, you know, putting them in places and spaces. And that's the reason for me, like having them come to conferences, that's so important. My daughter's been coming with me since she's 13. So she gets this concept of different things. And so having my boys in those spaces and places too, it's been paramount. It's been monumental for their growth, because they're going to listen to somebody else before they listen to their mama. I was on a panel. We was at ABC last year. I was on a panel with the Queens. And I was like, so which one really resonated with you? Like, which queen on the panel, thinking he was going to say his mama? He was like, Aisha Verze. I was like, right? Okay. Yeah. But as long as you're getting what you're doing, I'm good with it. You know what I'm saying? It's all good, you know. But we should, I believe it's very important that we have conversations with our kids. And I think we're not having the conversations with our kids because we don't know. I mean, I'm not a CPA, so I can't even answer like tax questions because we're not qualified to answer that. And, you know, we know that off top, right? Dominique, first thing we got to say is, listen, I can't advise you because I'm not a CPA. I'm a real estate professional. Yep. But, you know, as it makes sense, I think we should be very actively engaged. I think it's so dope, Dr. Angeline, that you guys came out there with your W-2s and you guys had discussions.
Yeah.
I gotta adapt that. I think that's great.
I think I'm gonna do that with my daughter. My daughter is 20. She's in college. So she's been working forever, but I'm really trying to get her to listen to your mother, file your taxes. So I think I'm going to do that. Like, let's do this together so that, you know, she understands the process and so that she can take this on herself, because she's old enough. She's 20. So you're at the age where, you know, you'll be graduating in a couple of years. You're going to get a full-time job, and you have to figure out how to do this and make it make sense for you.
That's great. I think it's dope. I want to go to some comments, but I do want to ask you guys that, what do you think, or what's some advice that you give people when they are filing taxes? What should they do with their tax money? Should they save it? Should they spend it? What's some advice that you tell them, Dr. Angeline?
It depends to me what stage of life they're in, right? So one of my friends just said to me last night, she's like, girl, I can't wait to get my income tax back, right? That's what we're talking about right here. So I said, for real? Well, what you gonna do? And she's like, I got to pay down these credit cards. These interest rates are crazy on my credit cards. And I'm getting ready she took a little break because her mom had transitioned and all of that. And she's like, I'm getting ready to go back and do some stuff with my business, with my company. So she did that. I was actually thinking about what was I going to do with a rebate this year. Was I going to invest in some more stock? Was I going to put it aside for the business? So I'm still, either way, I'm investing in me. So what I will say is, don't run to the stores and don't try to go get that $500 pair of shoes or that bag, and especially now in this economy that we're living in now. And we don't know what is going to happen with this one in office. We have no clue what's going to happen tomorrow. What law he going to make up? What's he going to change? All of that kind of stuff. So I'm thinking about that. And then also looking at some high yield savings accounts.
Good.
What can I do with that? So I haven't decided yet, but those are some of the things that I would suggest.
I love it. Growth. What about you, Dominique?
So it does depend on the person, but with me being a real estate agent, oftentimes when people come to me, you know, they're looking to purchase. And so if they come to me early on and we come up with a plan on, you know, what purchasing looks like for them, and we say they're waiting to purchase for about 6 months, and I know we're coming up on income tax season time, I tell them to use that as, you know, their down payment and savings towards their house. Also, I tell people, just sit for a minute, plan your money, you know, plan what you're going to do, because then it can make sense. Because I do believe that if you're not looking to purchase, you should invest a little bit. I don't believe that you should pay down all your debt, you know, make some of that money work for you. But maybe there's one credit card that you want to pay down. You know, if you know you're getting tax money every year, don't spend all your money paying down credit cards. Put some in the high yield and savings account. invest some of the money. Just make it make sense for you, but have a plan. That's the biggest thing. We perish because we don't have a plan. And so you have the money and then you're just swiping. You're going to get those shoes. And at the end of the day, those things really don't matter, right? If you get those things, you're going to wear them shoes a couple of times. And then guess what? Now you're back in the same situation. If you're going to get that type of money, position yourself, and how do you position yourself? Figure out how to make that money work for you. Again, you can pay down debt. I believe in putting money in multiple baskets. Pay down debt. Get some kind of investment. Put it in a high yield and savings account. Purchase a home. Do something where your money is going to make money.
I do the Grow Your Money podcast, and I came up with that term when I was talking about taxes. I was like, what you gonna do with your tax money? You gonna grow your money? You gonna blow your money? And it's like, it just stuck. But that's the thing that happens is the first thing people do when they get their tax refund. It used to be they would go buy TVs, they buy a little furniture, maybe they do something, now they going on vacations, they live in a soft life. Let me tell you something, they got that tax refund and they are doing it. Right. And we looking at them on Instagram like, dang, I want to be like them. And they didn't use all their little tax money. I said in the beginning that your tax money, that is not a bonus. That is a refund. Okay. You overpaid the IRS. You overpaid the government and they are just merely giving you money back. So what happens is you're giving them a loan, a no interest loan. So they're taking your money and they're probably investing in it or whatever, but they got your money. And the moment that you owe them money, guess what? They're going to charge you interest, not just interest, but compound interest and penalties. So a couple of things that you could do is you could change your taxes. You might not get a big tax refund at the end of the year, but it's your money that can stay in your pocket right now that you ain't letting Uncle Sam hold until the end of the year. So that's the one thing I would do. Is I will keep all my money and let the government not get as much as my money. Because again, it is not a bonus. It's your money that you getting back. The moment you owe them motherfuckers, you're going to be paying interest, compound interest, and penalties. That's number one. Number two, if you can get a business. Oh, no, let me say this. Let me just tell you some of the differences between what the big, beautiful bill and how it's changed and how it can actually help you, right? So before, when Orange Man was in office, in 2016, he changed the tax code and he lowered the standard deduction. So for the past 8 years, we've been dealing with lower standard deduction. So we've been able to write off less. So we've been able to get less of a refund. And so now he's touting, oh, your standard deduction has doubled. Look at what I did for the American people. I made it to where you can double your deduction so you can get more back. Well, he's the one that took it away in the first place. So now you go back to the itemizing, because before you can only take out so, or you can only deduct so much. So this favored workers who didn't own homes or large assets, right? Which is not most of us, but a lot of us, 44% of us are homeowners. So you still have 56% of people who don't have that. And so it helped those folks who aren't homeowners to be able to write off, more in their taxes. Also, the child tax credit, which was something that he had reduced before as well. So you were getting a smaller tax credit. Last few years, I couldn't even really claim my kids. I wasn't getting nothing back from my kids. So now we're back to that. But now my kids is grown. So like, they ain't really going to help me. Last, 8 years, I haven't been able to really benefit from having children. So now we get a larger tax credit. Because if you take the standard deduction or however you do your taxes, a lot of times the kids wouldn't even matter. So that's good because it gives you income-based relief instead of like deduction-based relief, right? Before, if you were a business, you had pass-through businesses that was income tax like ordinary income. Okay. Now, and before it was like for people who had sole proprietorships, they really weren't incentivized to become LLCs because the tax benefits weren't really there. Well, now remember, this says the big, beautiful bill incentivizes the rich. It actually incentivizes not only the rich, but the business owner. So you get up to 20% deductions on qualified business income. That's huge. That's QBI. And then you get clear rewards for LLCs and S Corps. You have a lower effective tax rate. So remember, they said they were reducing the rates, the tax rates for the rich. It's really for the corporations. So if you're a corporation, then your tax rates get reduced. Before you had, so for state and local, it was better. Now it's worse. So now they have caps on state and local, and corporate tax rates for corporations. They were much higher before, because remember, the Democrats are all about taxing the rich or the corporations. Trump is all about, and the oligarchies are all about reducing taxes on corporations and rich folks. So now we have lower taxes for corporations. Again, a lot of us don't have corporations, but if we were strategic, then we could take advantage of these. Okay. And then you have estate taxes. Most of us ain't really dealing in state taxes because we ain't in that tax bracket, but the tax exemption gets lowered for estate taxes. That's for, ultra wealthy people. So here's the thing. Before, the tax code favored income earners, right, who knew how to itemize. Now it favors owners, investors, and people who have some type of structured entity. So historically, Black people, we were locked out of business ownership and home ownership and access to capital. In some ways, we still are. However, the law didn't fix it. It just made the reward for ownership a little bit larger. So if you can get in the game and you could try to think strategically on how you can create a business so that you can take advantage of these write-offs and you can get taxed less, that will be great. Because Elon Musk being a billionaire, but you making $50,000 a year or $100,000 a year paying more in taxes than this dude is crazy. So this ain't all by accident. This is by design, but there are ways that we could take advantage of it as well. So you guys have any thoughts on that?
So for me, when we think about finances in general, right, we're talking about taxes and all that. Finances is about freedom. And so when we look at it from that perspective and really think about this, you'll be able to do a lot of things if you make those temporary sacrifices up front. You make the investment, you position yourself financially, the best way possible. You have the amount of money allows you freedom. Yeah. Yes, you can buy things, that's great. But it's nothing like having your freedom, being able to move the way you want to, being able to say, hey, I want to go out the country and live out the country for a period of time. And you don't necessarily have to go into a job to be able to raise our own children and not working full time and somebody else raising our children. Money is about freedom. And so if we think about income tax and even getting a refund and we say, hey, I'm getting this refund. How can I position myself? I know next year I may get a refund. How can I position myself so I can have freedom? That's where that's the game changer for us.
That's the game changer. And that's the bottom line. I love that, sis. It's all about freedom. What do you say, Dr. Angeline?
I totally agree. And I work a lot in communities where people are working 2 and 3 jobs just to survive. So to them, it's helping them understand that I don't care if you're saving $20 a week, $10 a week, you're saving something. Let's look at what you can eliminate. Let's look at what you can save. Let's look at how these things can benefit you. Because it's not only about freedom, it's also about a mindset. And when your mindset is positioned that I'm going to win, my family's going to win, I'm going to break this cycle of generational poverty, and I'm going to learn and be okay with how to do it. I think that's when I'm watching people now move forward, get an education about money, like you said, money overall in general. And when we look at our relationships with money and what we've been taught a lot of times generationally about our relationships with money, hide it under your mattress, put it in a shoebox, go spend it when you get it. And I'm not saying that there aren't times that you can reward yourself. We all need to do that once in a while. But when it's every single day or every single week, then there's a problem. And when we begin to do that, what are we also teaching our children about money and the relationship about money? And so, yes, I fully agree with freedom, but we also have to deal with mindsets.
We do.
I think people think that it's so far-fetched and it has to be so overwhelming. It really doesn't. One thing that I've done is for my children. I started them an IRA. I literally put $25 a month in there. So imagine when they're in their 60s, it's not like a grand amount.
I
It's
love
small.
it.
I have it coming out like a bill. So there's nothing that I can't, I'm not going to miss it. It's coming out automatically, but it's just those small changes that reap big rewards. And so I don't want people to think about it like it's just this grand thing. It's not.
Yeah.
It's
Thank you
not
for
grand.
Yeah.
You know, it's small.
Yeah.
And people need to know that even on a fixed income, you can still do it. It is
Right.
still doable. Absolutely.
You guys two are absolutely right. And I think that is, I think it's paramount, especially for an average everyday person, right? Because a lot of us are not going to be able to take advantage of maybe the business or the corporate tax breaks. But what we can do, how we can cut the fat, how we could take the tax refunds that we got. I always say, take that money and grow it and put it in something that's going to grow and not blow. So I love the fact that you said you're doing an IRA for your kids. I have money going into an Acorns account. So all my boys, they actually have custodial accounts for Acorns for kids who are under 18. So my boys, when they turn 18, it automatically goes to them. Yeah. And my oldest son, actually right now, my youngest son, he's getting ready to turn 18. And so he wants a car. So I'm buying him a car next week. And my oldest son, I had given him his Acorns money. So anyway, he's given his Acorns money to his brother, and his brother has his Acorns. Anyway, but when they turn 18, they turn it over to them. And then I utilize that for something that's going to benefit them. You could do that for your kids. And also, it also spreads it out to where it'll do an IRA for them as well. And what it does is it takes your savings and it invests it in stock for them. So that's great. I have a training on in my Grow Your Money Club where I show people how to cut the fat out of their everyday budgets. And then you invest it. And that's the biggest thing. Put it in something that's going to generate high compound interest. Because compound interest, it makes a difference. You put your money in a bank account, that's 0.23% interest. You ain't making no money off of that. They're taking your money and investing it. They're making money off your money. Your money is not making any money. So put it in something that's going to yield high interest, like you just said, like an IRA or something like that. You had a question, or you want to say something, Angeline?
I also, first of all, I'm joining your podcast. I'm telling you that once I get off of here.
Amen.
And sharing your podcast. But I also want to give a shout out to Dr. Boyce, right? Because he has something every morning where you could tune in for free and get some money advice. And I will say, as one who paid for a couple of those courses for my great nephew and sat and watched and participated with the courses around children at a young age, learning about money, and hearing some of those young people, they making some big money from learning the stuff that he is teaching. So there are, just like this is a free hour and a half, whatever, to learn some things and learn where we can also go to, i.e. Constance, and now i.e. Dr. Boyd as well, and even sit with our kids and invest in our children that way as well. Because I'm gonna tell you, my nephew loved it. He had a ball, and the kids were playing around and interacting with each other. So they were building their own networks right there.
Yep.
It is so important what we do for our kids, what we leave to them kids, not just money, but it's really the financial IQ that we're leaving for our children. There was a study in 2017 that said by the year 2053, our median wealth is going to be a zero. It is an emergency. We have to ring the alarm of how important it is to make sure that our children have the financial literacy that they need so that won't be the case. 2053, what is that? 20 years from now, 30 years from now, it ain't going to be, it's coming up soon, but we ain't going to be as affected by it as they are, because we probably going to be in our 70s and 80s and 90s at that point. So, it's extremely important that we're taking that information. And Dr. Boyce, my son, he was 12. I bought him the stock thing, and he took $1,000 and made $8,000. But putting that into the kids is so important. When we have conversations around our dinner table, it's like, what are you investing in? What are you investing in? What are you? And they know if they come to me and they have an investment idea or opportunity, I'm gonna do it. And even if we lose money, we're gonna take a risk. And so those are things that I think is important too, is not only having a conversation, but investing financially in your children. I love that you're putting money, $25 a month in your children's IRA. That's huge. But also teach them what that really looks like and what that really means. Because when my daughter came in here and was like, you ain't teaching, I'm gonna give you some tips on how you can raise your boys better. Like, you know, we have to have those conversations too. So I obviously have to do a better job as a mother thinking, oh no, you know, I did it, I got it. I obviously got to do a better job in maybe communicating with my children. Let's look at this last video before we get out of here, if that's okay. Are we doing the last video or no?
Peace, family. These are 3 things you can do this year with your tax return to help you get ahead in life. Number 1 is going to be pay down debt. Now, I know there are some good debts out there that can help increase your credit score and that can help increase your income monthly, but that's not what I'm talking about in this video. What I'm talking about is those high interest credit cards, those high interest student loans, those high interest car payments, just a bunch of unnecessary stuff that you don't need. Yeah, let's try to pay those down this year. Paying off those high interest loans is going to increase your credit score, but more importantly, once you pay them off, it'll increase the money that you can keep at the end of the month. Number 2 is going to be save. Save, save, save. Now, I know it's going to be tough to save 50 to 70% of your return, but you want to save something that's realistic for you. You never know when life is going to hit you and you're going to need an extra $100 to maybe even $200. So definitely save this year and it's going to help you. The last thing is going to be invest. I'm not talking about investing in real estate or investing in stocks or anything like that. Although those are great things to do, but this year, if you don't have the money to do it or the connections, just hold off on that. What I'm talking about is investing yourself. So whether that's going and taking a course you've been wanting to take, or maybe getting a certification for your job so you can make more money this year, or even starting that side hustle you've been wanting to start. Whatever it is, invest in yourself and you'll be happy that you did in the long run. And always remember, chances make champions. Peace, family.
Chances make champions. I love it. So do you guys have any tips on what you can do with things that I know we mentioned it earlier, any other tips that you can give to the people? And let's let that be your final thought. Like, what are some tips that our audience can take away on how they can leverage their tax refund? I'll start with you, Dr. Angeline.
I think we covered a lot, so I will just go ahead and re-emphasize. One of the things that I'm not sure if we talked about was making sure that we know the tax laws in our state when we go to file as well, because every state has different tax laws. I'll say it again, do your research around what type of business that you want to start up, which will work best for you. And like it was said as well, have a plan. This year, after listening to this show, sit down and think about everything that you heard and then plan your way with your refund, right? What are you going to do? How are you going to incorporate some of these things? Another tip is sister right here, Constance, has a podcast. Check in with B1. Check in with resources, free resources, all of those things, because it is out there for us. And we have to also take advantage of it.
Thank you so much, Dr. Angeline. What about you, Miss Dominique? What are your final thoughts? What can they do?
So, it's the saying, poor preparation prevents poor performance. And what I would say is you're going to get this money, just have a plan and prepare. Yeah. Make sure that you're researching the person that you're going to use to file your taxes. And again, plan what you're going to do. There are so many resources available to us now that we did not have back in the day. There are a lot of different ways that you can invest your money, whether you do the high yield and savings account, or you open an IRA, or you purchase a home. There are a lot of ways for you to be able to make money. But the biggest thing is just planning. If you know in advance that you're going to, you want to make moves and you want to do certain things and you're going to get a refund, just have a plan for what you're going to do. So if you guys want to reach me, you can find me on all my social media platforms at the Whitmore Group. And you can go to my website, thewhitmoregroup.com.
Yay! Ladies, you guys are awesome. I would say, so I did a TED Talk. It's called Google That Shit. It's a pretty good TED Talk, if I might say so myself. It's the best one I've ever seen. No, I was kidding. But I do talk about closing the wealth gap. And I talk about 4 ways that you can close the wealth gap, that I believe that we should be closing the wealth gap. One thing I said is to invest in real estate. You invest in real estate, you can take advantage of the tax codes. You can write off your taxes. You can write off your interest. These are deductions that you could put inside of your taxes. Okay. Invest in stock. Just like Elon Musk did, if you have a good portion of your worth tied up in stock or other investments, then you could reduce your liability. Invest in your babies because they are our future. If we're investing in them, then it's going to make our community much better. There's an African proverb that says, when you teach a woman, when you teach a man, you teach an individual, but when you teach a woman, you teach a nation. And women are always going to teach their children. So we have to be there to teach our children and teach our communities. And finally, like the gentleman said on the video, invest in yourself, because you are your biggest commodity. You are your biggest investment. You are your biggest risk. And you're a sure thing. Bet on yourself. And if you bet on yourself, you put that money in you and the things that's going to grow you, that return on investment is going to be 100-fold, y'all. So continue to do those things. This conversation was really great. I'm glad we had these conversations. It was a little bit tough because, again, ain't none of us on here CPAs. We can only kind of give you advice on the things that, our experiences. But, hopefully we were able to give you information the best that we could based upon our lived experiences, but we can't give you like tax advice or anything like that. So I know we had some comments out there asking for tax advice and strategies. We ain't no CPAs, so we can't do that. But I will say that what tax season does is it exposes more than just numbers. It shows who the system works for and who it does not. Understanding your tax laws is not about gaming the system, because they always, the R and the S, they gonna figure out a way. It's really about knowing how it works, so you're not paying more than you should or missing out on opportunities that others are using quietly, which I think that we were hopefully able to articulate to you the strategies that you can use. This conversation was really about awareness, preparation. What did she say? The 5 Ps, and then making smarter moves with the information that we have. We appreciate you guys joining us. We will see you, not me, maybe them, tomorrow. Same bat time, same bat channel. See you then.